credit costs. You must have seen a lot of countries grappling with this bad loan issue. Are you confident that you're going to see lower credit costs this year? And would you therefore go to the big corporate lenders, Axis, ICICI, SBI, BOB?
So I am confident that the distress in borrowers is improving. But remember often that credit costs are a lagging indicator. Yes. A particular example, we were doing work on 5 of the big overcapacity industries in China, and we estimate that between 2015 and 2017, their free cash flow has improved by 1.1 trillion renminbi.
Oh, okay.
So
that includes steel, does it?
That it does include steel, it's petrochemicals,
okay.
it's cement. So there's dramatic improvement in profitability. We had this theme about at the end of PPI deflation, in India's case WPI, and the improvement in PPI, WPI yes. is hand in hand with an improvement in pricing power and profit margins. And so for the industries in India where there's been a big focus on credit costs or high credit costs, we see a turnaround in places like China, which is probably very important in terms of a price setter, that should be good news for India. So it is possible that banks charge off more, but really the forward-looking indicators that the market should focus on are moving in the right direction.
You still have a year-end Nifty target range of 9,300 to 9,600, if I'm not wrong. Is that something that, you know, is the reason for that because you expect the markets not to move at all, considering that some of the more heavier sectors like banks, etc., have issues? Or is there some other bigger concern? So
we set our index targets shortly after the US presidential election. And we set them with a series of scenarios for a base case, a bear case, and a bull case. Okay. So our bull case, the Nifty equivalent, and we tend to set these all with the MSCI indices, the Nifty equivalent is about 10,500. Okay. So part of what's going on in India is consistent with the bull case. Okay. But what is currently not consistent with the bull case is the macroeconomic data, specifically issues like corporate investment. And we would need to see those data points coming through to be comfortable to say that it is reasonable in terms of a valuation, a target, to have the Nifty finishing this calendar year at 10,500. Okay. And I think as a market, we're going to become much more dependent on the data, the macro data, proving that there is an acceleration going on. And an acceleration going on in the underlying numbers, not in the real GDP number, which doesn't seem to be correlated with the profits and the turnover of many of the companies in the Nifty.
Okay. Yes, that disjunct or disjointing feeling is there among macro data and micro data. Time permitting, I'll come back to this theme. But first, let me just flush through the financial sector questions. While credit costs will impact the P&Ls of the corporate lenders, there is the non-bank area which is actually picking up a lot of speed. In fact, you know, Sonia was referring to the 4% loan growth. That's bank loan growth. Bank loan growth as a percentage of total loans that India lent to the commercial sector used to be as high as 85, say, up until 2 years ago. Last year it dropped to 75. Now it is 73. I mean, 27% is occupied by the bond markets. Therefore, the NBFCs, how do you like them?
So, we do like some of the housing finance companies as an example of NBFCs that we do cover. And I think that there is an opportunity here, and a big part of that opportunity is delivered by the constraints on the capital of the PSU banks. The other thing is, you know, in focusing on housing finance, where you have had relatively strong loan demand, has tended to be with the consumer.
You know, the government of India had announced, the Prime Minister had announced a housing for all scheme, a low-cost, affordable housing scheme, where the government picks up a large part of the bill, you know, almost 3 to 4 percentage points of the interest cost on houses up to about, 110 square meters, small houses basically. Is that a motor enough to push up a lot of stocks? Would you bet on that theme and therefore with stocks?
Yes, and this is something we should explore with DLF, because they had moved into mid-range housing and then sort of moved back out to higher-end housing. It's only in a place like Mexico that I've seen a business model of listed companies where they were into low-cost housing. So it is quite a difficult environment for the private sector. And it's very policy dependent, and obviously a change in the government policy, how much discounts they're going to give on mortgages, can have a profound impact on the business model.
Okay. In fact, you know what? We're going to take a short break, and when we come back, we will tackle our first theme of the day, real estate. And the question we're asking is there a revival on the cards? And this whole affordable housing scheme that the government announced, how much of a boost would it give? Adrian, in fact, will be quizzing the DLF management. So joining us on the other side will be the company's CEO, Rajiv Talwar. Do stay tuned in.